Welcome to Invest. We talk about investing, finance, and professional development. So current time of 9:11 a.m. on Eastern Time on June 11 on Saturday. Respect to Ethereum is currently trading at $1,555. Down about 6.16% so far. On the over crypto market, as of this morning, is relatively red as investors across the globe is digesting the negative CPI report that came out from the US, obviously, at 8:30 a.m. on the Eastern Time on Friday. And with respect to some other catalyst that's also supplementing the negative catalyst that we saw from the CPI report, would be coming up from President Joe Biden. Seems like Joe Biden gave a speech slamming an oil giant, ExxonMobil, on Friday for what he described as some sort of negative affectation, calling the oil giant some sort of a greedy reluctancy to produce more petroleum, which subsequently drive the oil price to be fluctuating upward from here, right? Trading around like $124, $125 per barrel, right? And he, in his speech, I think the body language psychologically is relatively, sensing a sense of frustration, and also it doesn't really convey a lot of optimism and confidence, right? Just basically like a blame game and also like bashing the oil company in a diplomatic way, like a politician would be doing, which makes sense, right? And he's saying things like, "Why don't you tell them what Exxon profit was this quarter? Exxon has made more money than God this year." Like just think, saying sentences that doesn't really have a lot of quantitative background, but just a lot of negative verbiage. And then Exxon has responded that it has been regular contacts with the administration, and they informed them with their planned investments to be increasing productions, expanding refining capacity later in the future. So seems like Joe Biden is being relatively blunt and raw during the speech, but in response to that, on ExxonMobil, obviously they have the whole corporate PR team stitching a diplomatic answer saying that, okay, it is in progress, it is in work, that they are going to be increasing production and expanding their capacity to subsequently hope to obviously rebalance the supply and demand dynamics of the rising oil prices, right? Which, as you can see during this weekend, I believe oil prices also spiking. Some gas stations are reaching like $5 a gallon on a national perspective, but in New York, it's about like $7.25 in selective regions, especially right by me as well. And then that's really pretty much it overall on the negative catalyst that happened on Friday. But obviously, next week's going to be a big one, right? We have the FOMC meeting that's going to be debuting on the 14th and 15th. So the in-house meeting is going to be on the 14th, but the 15th is going to be obviously the confirmatory signal that we'll hear from Jerome himself, which should play on a broadcast at 2:30 or 2:15 p.m. on the Eastern Time based on my historical recollection. So let's just dive into technical, see what's happening right now as of recording time of 9:15 a.m. on the Eastern Time. We're at the 1550, which is exactly what we talked about yesterday, right? And right now we're about to form a death cross, but you can see that clearly we have not formed it yet, right? So ideally coming down further, and you could see that we clearly got to even a lower level of 1544. But I think, seeing, it completely being crossed down first and then cross up. So that means, like, as we get closer to 1500, which is not a real level, 1450 is the next level, right? Can be very possible. And I think we need to do that until we recuperate and replenish the bullish momentum. And then I think the timing also because we look at a daily perspective right now, is like as we get over the hump next week, which technically we still have like about 56 hours away from the FOMC meeting, more obviously, plus or minus. But in terms of like the anticipatory pressure, when it's going to be like the most baked in, that's going to be around that time frame. So we still have some elongated duration in between now and then, right? So it means that, we are going to be slowly peeling off the bandage of our wound at the same time, we might hear some other external catalysts that might be, detrimental to the near term as well. Especially we don't know what's happening on the other side of the world as well. That could be another negative supplementary factor on driving more downside pressure. In addition to that, with respect to what I mentioned yesterday, is the leverage problem that we're seeing, right? A lot of people are overly indexed on leverage ratio in terms of their investments, right? So people are using like 5x leverage, 10x leverage to be buying crypto on margin, right? And when your crypto assets go to a certain price, you get liquidated, like because you have to cover your margin. And as you get into a margin call, you're forced to sell, and that will also drive a lot bigger seismic selling pressure as well, which reaching to a lower level can be impossibility as well, right? So that's something that we also have to think about. So it's going to be a relatively scary next couple of days coming up. So mentally prepare yourself. But if you're like holding your cash, holding your investment in and you bought it with cash, just hold it and like don't look at your app and just like probably go walk away, go on vacation or something like that, or just like ignore it, because like these are the times that muting your emotions would be the best policies. In respect to Bitcoin, with the 2,500, which is exactly where we were expecting anyways. So we are about to form a depth cross, so we have not even formed it yet. So ideally coming down further to 27,500 all the way down to 25,500 can be possibility, right? In respect to Ethereum Classic, we are at 18.83 at the moment. You can see that we're matching with the previous level. You cross down, so this is actually not a terrible level to DCA. But right now we trade on the flat numbers, 1850, 1750, 17, 16 from there, right? So in terms of like Classic, is a lot more oversold in comparisons to the key coins, Bitcoin, Ethereum, respectively. Dogecoin at low 7 cents at the moment. We are about to form a depth cross, so it means we have to sell off a little bit more to like the low 7s right now, all the way down to like the rock bottom, which is 65. So I think we will have actually break 65 based on the current setup right now. So ideally going down to the flat numbers, right? 60, 65 again, right? 55 respectively. Cardano is about flat, right? And I think with respect to the current setup right now, you have a long way to come down. So as you cross down, you'll ideally break to the next support level, which is 48. So like anywhere from like 50 cents below would be more logical to DCA than the current level right now. And the Solana down about 7.5% at $35 at the moment. Like we said, right, we need to cross down and then cross up. So we reached 35, and you can see that clearly we still have not crossed down enough yet. So I think ideally coming down to like the next level of support, which is 33 all the way to 30, is impossibility. XRP down about 4.07% at 37 cents at the moment. I would say we are matching with the previous support level, which is 37, right? But we need to cross down and cross up. So ideally coming down to a lower level around 35 all the way to 30 would be more logical to DCA from the current setup. Polkadot's down about 5.27% at 8.24 at the moment. Like low 8s would be a better level, but we're kind of almost there already. So, but we're going to be trading on the new levels, right? Like 8, 7.5, 7 respectively. We're forming new lows altogether, right? Some of the altcoins are just not just kind of giving up fundamentally. And then for Algorand, we are at the 35, right? So we need to cross down and cross up. So ideally coming down to even a lower level, about like 30 cents, 25 cents would be more logical. Shiba Inu is in the 3 digits mark right now. So we broke below the 1,000, right? So coming down to a rock bottom technically is 858, right? But you can see that clearly we still have not crossed down yet. So we need to cross down. So I think ideally breaking to new lows again would be an impossibility. Polygon down about 5% so far at 56 cents, at down about 4.72%. new lows we're going to be forming. So as you break below 50, 45, 40 respectively, I think we need to do it because we do have a large separation in between. And then the AVAX down about 4.17% at 20 cents at the moment. So large separation, you need to cross down and then cross up. So I think forming new lows all over again would be like the 20, 15, 10 respectively. So it's definitely a painful one. Obviously, it's a collective lack of effort, I would say, in a proactive perspective, right? From the administration to the Feds on their lack of proactiveness and tactical next steps. It seems like we're progressively getting worse. Yeah, so we will only revive altogether if the Feds and the administration can step it up and give us a more of a tactical, proactive next step. That's just the way it is, right? So in terms of the sell-off, we are, we understand where we're going to be going to ideally. So be prepared mentally. But if you're planning on holding this for the next 3 to 5 years or 10 years from now, it's like no point of actually looking at this point, because like we're just being overly micromanaged at the moment, right? But it's definitely, hard for some people to stomach this, especially we are in this on the verge of recession, and as we get that, I guess the last dump, next Wednesday or Tuesday, we might be in it for sure officially. So yeah, it is what it is. And we kind of have to get to those extremity until we rebound. And that's when like corporate company will step up and revive the market slowly. So appreciate you. Have a good Saturday. Let me know if you have questions. Okay.